Welcome to Simple Steps for Starting Your Business, number 4 on finances. This webinar is being recorded. The presentation and the link to the video will be emailed to you. If you have a question, when it comes to your mind, please just go ahead and type it in the chat and we will get to those questions at the end of the session. My name is Tom Sims, and I would like for you to participate, if you will, in our poll questions. So here they are. Number 1, are you in business? Number 2, do you have an accountant? Number 3, do you do your own taxes? Number 4, do you know what your break-even point is? And we'll give you a moment to do that, and then we'll announce the results. Okay, here are the results. 33% of you are already in business. Nobody has an accountant yet, and no one is doing their own taxes. And 33% of you know your break-even points. So the good news there is we all have some things that we can benefit from greatly. Our presenters today are Tom Sims, that's me, Jaspreet Chawin, Mike Moore, and Bob Garcia. They'll introduce themselves just a little bit more when they come to their time. Financial matters. We're thankful for our sponsor, Union Bank. It's always great to have community partners that help us put on this webinar and bring you this valuable information. We'd like to introduce you to SCORE if you haven't heard. If you are new to us, SCORE volunteers are successful and experienced business executives. We offer seminars and workshops. You can sign up today. If you don't have a mentor today, you want to have a mentor. And so don't delay, sign up at score.org/find-mentor. And once you've submitted your request for a mentor, you'll be assigned a mentor for the remaining sessions and for going on. That person will work with you one-on-one, and you'll receive an email very soon from them. And then you'll have a meeting. You can probably have a meeting within a very short time after you've submitted your request. We, at our own local website, centralvalley.score.org, offer numerous resources for you and your small business. Here's the process. We just kind of go over it each time to let you know. We do one-on-one mentoring with everyone. You're in the Simple Steps class right now. Session 1 is Startup Basics. And it just introduces the concept. Session 2 is working on your business concept. At each step along the way, you'll be making a go or no-go decision on next steps with your mentor. Session 3 was last week as our marketing plan. Today it is Session 4, Financial Matters. If you are on the go with us, if you have made your go decision, then your mentor is working with you every week to help you build your business plan. Next week, it'll be our final session of this round, and that is funding options. And most people find that extremely valuable in many ways. Our agenda today is touching on these items: financial planning, financial projections, forecasting sales, pricing fundamentals, understanding financial statements, and record keeping. It is extremely important that you do financial planning if you are building a business. You have to be able to match your business concept with your personal income goals. It is vital that you gain a better understanding of financial risks and rewards of entrepreneurship. They both go hand in hand. This helps you figure out how much money you will need to start and run your business so you're not caught off guard. You'll be identifying development and startup costs, ongoing operations, expenses, and funds needed to finance your business. You can create a plan to help guide future business decisions and monitor results. And finally, it enables you to communicate with stakeholders. Now, that would include investors, lenders, all the people that your employees that have a stake in your business about your business's finances. Moving on, we are also want to touch to helping you understand that a financial plan is your forecast of sales, profits, and assets for the first year or more after startup. You can use it to predict how successful your new business might be and understand where your money will be allocated and where it'll come from. And it helps you to examine the feasibility of your numbers and organize your business finances. So it's a modeling tool that helps you evaluate variable factors. It's a benchmark for tracking your progress, and it's a blueprint so that you can adjust to achieve your financial goals. It is an honor to turn things over to my esteemed colleague, Jaspreet Chauhan.
Thank you, Tom, and good morning, everybody. And as Tom says, my name is Jaspreet, and I will be talking about, Tom already mentioned the importance of financial planning. So can I have the next screen, please? Thank you. So I will be talking about the templates, the spreadsheets that are available as a business owner to make our job easy. So there are some common concerns. The spreadsheets looks complicated. I don't think I can do this on my own. I don't understand all the figures and math. This is overwhelming. So can I start my business without a financial projection model? So a lot of small business owners, I know it gets hard when you don't have any kind of like a, information where you're keeping track for all the expenses, all your incomes. So, if you don't plan, businesses don't plan to fail. They often fail to plan. So that's why it's a financial planning, having projections is very, very important. And using these spreadsheets, it can help a lot. Okay, can we get to the next screen? So these are the, worksheets that, first 6 worksheets that are available for, small business owners to utilize these. So there is a workshops required startup funds, the worksheet, and salaries and wages, fixed operating expenses, projected sales forecast, and cash receipts and disbursements. So all your accounts payables, receivables, all your expenses, how do you, plug them in the spreadsheets. So we will give you basic information on those. Okay, next screen, please. Okay. So you can, you can see at the screen, this is a financial projections template, required startup funds. How much do you need for your business? What will it be used for? Also consider starting costs for employees, their salaries, their taxes that you're responsible, the benefits that you're gonna maybe incentives for your employees. This develops the asset part of opening balance sheet. So you can see over here on this template, it's very easy. You can see fixed assets has a different separate column. So all of your, let's say that you have a restaurant business. So maybe you need to buy land, maybe you need to build a building, your equipment or your fixtures and your furniture, right? Your vehicles, maybe you need delivery, vans or something to deliver your food. So those are, top section is the fixed assets. The operating capital is something that you need, on the side. Those are just like money that you have to prepare, right? So your prepaid insurance premiums, inventory, legal and accounting fees, and advertising promotions. So all of these, if you add the fixed asset column and the second one, this tells you this is how much you need to open a new business, total required funds. So for this business, for this model, need 213,800 to start of this business. Okay, let's go to the next one. Okay, sources of funding. So this is the, the bottom part of the balance sheet. So where we talk about the liabilities, how much you are, as an investor, putting for your business. So we can see over here, owner's equity, that is every $1 that this person invest into this business, 53% or 54% is their own investment. And the rest, we can see these are the loans, different type of loans that they're going to need to, fund their business. So total funding is 213,000. Of course, 115 is the personal investment. So the rest, about 98,000, is the loans and all that they're going to borrow for their business. Okay, next one. Okay, so also, we need to know that, if we are going to be working, in our business, we need to include our salaries. We need to pay ourselves. And also, if we need any employees, how much are we going to pay? So this spreadsheet or this template, it helps you, just like a section for your salaries and wages. So you can see over here, it has different separate columns. So employee types, where you put, owner, your employees, either they're full-time, part-time, or the number of owners, that's the column, second column, and the hourly wages that you're going to be paying them. And then the weekly total, how many hours they'll be working. And then the cost for each month. You can see that owner is paying $23 per hourly, and 40 hours they'll be working. So it's going to be $4,000 a month. And then they have like 3 employees. So they're going to be paying $5.77. I mean, that's just insane. But maybe that's their family, So they're going to be, working 40 hours and paying $3,000 to, the employees. So the total salaries and wages for each month, 7,000, right? Depending on how they're growing their business, they're maybe going to need, but it's not just the, salaries and wages. It's also the taxes that we as an employer are responsible for paying. So these are different type of taxes. We can see payroll taxes and benefits. Benefits might be for the employees. So like, providing benefit, pension plans. So these add up to about 14.75%. So 15% plus the wages, right? So 15% of 7,000, which is 834. So that's why we need to do calculation. We need to use this spreadsheets so we can see, for each month, how much are we going to need for the salaries and wages? Because when we start a new business, it doesn't start making income. I mean, it starts making income, but not the profit. Maybe we need to wait for a few months, to see the profit. So this is why we need to make sure that we have the ready, we have the model, so we don't panic, right? So we have the financial, that's the importance of financial for the business. Okay, so that's next screen. So this is fixed operating expenses. So along with the salaries and wages, we also need money to run our business. For the first month, advertising, car and truck expenses. And I don't want to go over all of these, but you can see, all these things that we might need for our business. And the good thing about this, these spreadsheets, or, you can design them, if you don't need any column or any row, you can hide them and you can make it precisely apply whatever titles, you can create new ones for your business. Okay. So components of your financial plan. So there are 5 elements that comprise a financial plan. So there is number 1, required startup funds that we already talked about. We talked about the salaries and wages, fixed operating expenses, and projected sales of forecast. How much sale you're going to be making every month. Cash, receipts, and disbursements. How much those are receivables and payables. Okay. So next screen. Thank you. So required startup funds, we already mentioned that, you need to calculate, whatever business that you're starting or buying, how much money you're going to need to start your business and keep running. What will it used for? And, your expected sources of capital, that your investments, maybe you have a partner, how much they're gonna invest in your business, and maybe lenders, all those things that you need to make records, what is gonna be available to you as a business owner. Okay, next one, please. Okay, so salaries and wages, we already talked about the salaries and fixed operating expenses. We saw those in templates that we include, wages for employees, business owners. Remember to include your taxes on wages. Typically, mandatory and voluntary fringe benefits total about 30% of wages. So let's say it was 7,000 total wages for the owner and for the employees. So on top of that, you need 30% for the taxes and for all the, if you're going to pay incentive benefits to your employees. And the operating expenses side, you have fixed operating expenses, which are necessary to run your business. Those are administrative costs that you need to make a list. And those includes your rent, of course. It doesn't matter you're making money or not. You have to pay your rent, your insurance, utilities, sales commissions, advertising, taxes, and license. We need those, right? Whatever business we have. So we need to plan for those, for the funding for these things. Okay, the next slide, please. Okay. So forecasting sales units. This is what unit categories make sense for your business. So you need to figure out if you're selling is a products, services, how much you're going to be charging per hourly, fixed price, combination. Maybe you're doing both, you're selling products with service. So determine what makes up your unit of sale. Determine your direct cost per unit. How much did it cost you? Your time, or all the cost of goods sold, right? You're determining your price per unit, how much you're gonna be selling for. Okay, and one more slide for me. Okay, 21. Thank you. So how do you determine your sales unit that you're going to be selling? Sales unit categories or grouping: product, service, package, volume, customer type, your unit cost and price. Build up from sources, subcontract, competition. So you kind of gather information from these sources to make sure that you're not charging too much or you're not charging less, right? So you use your competition, see what they're charging and what you have, and it's gonna help you to grow your business. Sales volume in units, estimate from market, competition, back in number to make business profitable. So these are some of the things that as a business owner, we need to know, just a basic information, how the spreadsheets are not hard to use, So Tom Sims mentioned the importance of the spreadsheets or the financial projections. And I showed you some of the templates that we can use as a business owner. And now I request Mike to step up and give us the next ones. Next slides. Thank you. Thank you.
Good morning, and thank you, Jaspreet. Now that we've had a chance to get an overview of the kinds of information you're going to need in order to come up with a good estimate of what's taking place, we're going to go to the example of this company, which is called Planet Earth. We are Planet Earth. They have 3 categories of sale, and as you might imagine, each represents a channel and each needs to be treated a little bit differently. They've got their own website where people can come and buy their products. They're selling on Amazon, and they also have started with Shopify. One of the critical things is that you need to be consistent in your pricing so that somebody doesn't come to your website and say, well, I can get it for less on Amazon. You never want that to happen. So you need to pay attention to how that's going. Next slide, please. You need to have as I mentioned, you need to have a smart pricing strategy. Additional elements of this are you need to consider what are you offering? Are you going to charge more and charge a premium price because you've got a better product, a toaster with tail fins, for example, or I'm kidding, something like that, something that differentiates you in a big positive way from the rest of the market? Or are you going to go discount? You're going to count on volume and you're going to sell it at a lower price and thereby get the sales. Or are you just going to meet your competition, but be there for your customer, service them better so that they choose to buy from you and not from others? The elements of pricing, a bit of a summary here: premium pricing, consumer reaction. You want to make sure that it's a positive reaction on all respects. Your competition, who are they? What are they doing? How are they selling? The costs of your product, and are you going to offer credit terms and discounts? Next slide, please. As I mentioned, you can think of these as sales channels, so that if, for example, you're selling directly to retailers or resellers, you need to charge them less so that they can make money. And again, keeping your pricing consistent so that there's not noise between the two or three channels, or however many channels you have for this product. You'll need to know what your costs are, and you're going to need to mark up from that to make sure that there's a profit in there for you. Another way of thinking about selling is, can you bundle? Do you have related products that you can add together? And instead of just selling the one thing, you say, well, we will sell you all three of these things for a full, complete experience. And the last thing is, you need to make sure that you know who your market is and that you direct your channel to it. I don't need to emphasize too much the fact that if you're selling to luxury buyers, that calls for a different treatment and presentation than if you're just selling to people that will get there, will get the job done, and will be out of your hair. A very bare bones sort of approach. Next slide, please. Another aspect of pricing is promotional pricing. We're new in the market, and for this week only, we're giving you a 20% discount on our product. Would be an example of a promotional approach to your pricing. Introductory pricing would be very similar to that. I would say introductory pricing probably relates more to a situation where you expect to have or want to have a long-term relationship. So if you'll start working with us, we're going to give you an introductory lower price, and then we'll continue on after such and such date with our normal pricing. Next slide, please. You need to really pay attention to the cost of goods sold, and that means the full cost. This is not only the direct cost of producing the products, or what does it cost you to buy from a supplier, but there's a lot of subtleties in that we'll get to in a few minutes. If you're pricing a service and not a product, consider the typical practices in your business. You don't want to vary too far from that. After all, what works, works. Pay attention to what your competitors charge. You need to know what they're charging. You need to know, are you going to match them? Are you going to try to do better? Are you going to discount them in an attempt to get the market? Next slide, please. You've got, in addition to paying attention to your market, you really got to pay attention to customer demand. Is your product selling? Well, you're going to know that pretty quickly right away. And the important thing is, okay, if you're not happy with it, what adjustments do I need to make to get a greater response from the market? Again, you've got to look at your competition. Did they suddenly drop their prices when you showed up on the market? Are your sales similar to, or better, or worse than others? You've got to ensure you're providing value commensurate with your price. And consider using credit terms and or bundling, which we talked about earlier. But credit terms can be a way of enhancing your sales capability. So always be careful before you increase your prices, because that always has a negative response for some unknown reason. Next slide, please. The most important thing to be aware of, or a very important thing to be aware of, is not allowing yourself to be pulled into a price war. Because if you set your prices too low because you think you're going to get the market, your customers will expect it. And your customers may go to your competitors who will then lower their prices, and you'll be caught in a downward spiral that you do not want. You can't win a price war. In fact, there are no winners because they can't be sustained, but the weakest competitor is going to be the one who fails. And the weakest competitor is more often than not going to be the new competitor because you've started and you don't have the wherewithal to sustain yourself through a campaign like that. Next slide, please. Just definitions, the gross profit margins is simply the difference between the sales and what it cost you to produce that sale. Buy a widget for $10, you sell it for $20. You made $10 on that unit. And it's important to keep that in mind because it focuses you on costing out what you're selling. And it helps also to get you to be aware of the adequacy of the price for your operations. Next slide, please. This is a very summarized, shortened example of what you would see in this part in your projections. Number of goods sold, what the total sales were, your cost of goods sold, what your total margin was. The total margin is what's going to pay everything else, things like rent, utilities, salaries, taxes, all that. Next slide, please. Let's just take a moment to talk about if you're selling on credit, you're going to have accounts receivable. You're going to need to set term. A typical business to business, which is where you see this most often, is, sell you an invoice, you owe us full amount in 30 days. There may be discounts, but we don't need to get into that. Same thing with accounts payable. That's the flip side of it. It's you buying from a supplier, and you need to pay attention to whether or not you're paying them on time. And just as an aside, this is very important to banks. They will evaluate with your receivables. Are you staying on top of your customer relationships? Are you getting paid? Because that's cash flow, and cash flow pays loans. Same thing with the payables. They're going to look at it to say, are you treating your suppliers right? Are you paying them on time? Because if you're not, and you're coming to us for money, well, that's not going to work. That's not how it's supposed to work. Next slide, please. The last part is understanding financial statements. And at this point, I'm going to turn it over to my esteemed colleague, Bob Garcia.
Thanks, Mike. Good morning, everyone. Understanding financial statements. I say this often, and I don't say it often enough. It is imperative that you as a business owner understand financial statements, not only for the management of your business and its growth, but also to prevent fraud. Yes, you can hire it out, but remember, it's your money. You make the decisions, the buck stops with you at. The financial statements including the income statement, also known as the profit and loss, a cash flow statement, a balance sheet, and a break-even analysis. In making your projections, I would recommend that you go to the SCORE website and look for the SCORE financial projection template. It is an Excel spreadsheet. It's very user-friendly, and it will, after you provide the information, it will give you the projection P&L, cash flow, break-even analysis, balance sheet, etc. And you can go to YouTube for a demonstration of how to fill it out. Go to YouTube and search for Central Valley SCORE and look for the projection template demonstration. The income statement, it gives you a picture of your sales, your gross profit, your expenses, and hopefully a profit in a given month. You're not always going to be profitable if you're like most businesses, but it will tell you for the month what you've done. The cash flow statement is, like Mike said, is what bankers look at. It pays back loans. You don't necessarily have to be profitable in a given month. As long as you have cash flow, positive cash flow, you can pay your bills. And a balance sheet tells you the value of your business, the strength of your business. All three of these statements are what your lenders look at to provide financing for you and your business. But you should be able to understand that these statements say, so you can successfully manage your business. Next slide, please. This is an example of an income statement. As you can see on the right, it just gives you the first page of an income statement. Sales were $10,000. They sold plant mix. The cost of that plant mix was $5,500. Your gross profit margin is $4,500. And from there, you subtract your payroll and other G&A expenses. G&A is general administrative expenses, including rent, insurance, and things like that. And on the left, it gives you a full example of what a profit and loss statement will look like and how it needs to be filled out. Next slide. The cash flow statement is different than the profit and loss in that it incorporates all sources of cash borrowed or injected or contributed, and it adds to your cash sales. And you can see by the example on the right, you open the doors and you have $3,000 in your bank account. Your sales for that particular month are $3,000. Those are called cash inflows. And what you're going to do is from there, you subtract your cost of goods, your operating expenses, which includes payroll, and the principal portion of any loans that you may have. The interest goes on the income statement. That's another accounting transaction. On the left hand, and so what happens is that at the end, at the bottom of the page, you will subtract your expenses from all of the cash available, not only from the cash sales, but your beginning balance, and whatever's left over will be added to the following month. And the idea is to have enough cash transferred to each following month to pay your bills until you become profitable. And on the left-hand side, you'll see an example of what a cash flow projection statement looks like. Next slide, please. And then the balance sheet. I find that most business owners don't use the balance sheet in the beginning, but as their business becomes more successful and expands, they find the value in using the balance sheet to manage your business. From a lender's point of view, the balance sheet tells you the tangible net worth of your business, not the market value, but the tangible net worth, because everything is listed at cost, and there are some assets that over time will have a different market value. It tells you the value of your business, tells you the strength of your business, and to weather downturns in the economy or the downturns in your industry. And it is a tool that bankers use to extend finance. The balance sheet on the left gives you what it looks like, assets minus liabilities, gives you your equity position and the value of the business. Next slide, please. The break-even analysis. Not used very often, but if you're starting your business, it's imperative that you understand how this works. Once you make up your projections, you over, let's say, a 12-month period, you total your gross profit margin, in this case, $151,300. You divide it by your sales, and you come up with a percentage, in this case, 43.6. Then you add up all of your expenses, payroll and operating expenses. I know it says total fixed expenses, but I throw in variable, all of the expenses, and you come up with that figure. And then what you do is you divide that total operating and payroll expenses of $165.82 by the percentage, and you come up with a yearly break-even amount. This is the amount that you need, gross profit, not sales, the gross profit over the year to break even. And you divide it by 12 months, it's $31,551 in this example. This is important, especially when you're starting out, because 99 times out of 100, you are not going to be profitable when you open the doors for your company. You're going to be losing money for the first 4, 6, 8 months. Many businesses don't become profitable until a couple of years. What you need to do is add up the losses of each month, and hopefully they become less and less. And when you get that total, that is the amount of cash you will need to start your business to cover those losses until you break even. And this is a very important analysis ratio for you to understand and to use when you are making projections for your business. You can use this break-even analysis even for when you expand your business or offer new products for sale or services. When will that particular department become profitable? Very valuable tool, very powerful tool. And again, it can be viewed and prepared on the SCORE projection template. Next slide. Benchmarking in financial ratios. Most people, unless you've taken an accounting class or some sort of bookkeeping class, this is a foreign language to you. What does it mean? Current ratio, quick ratio. What does all of these ratios mean? They are an important part in the analysis of how well your business is doing. Lenders, bankers will use these ratios to determine the strength of your business, and you should compare them within the industry. Let me give you an example of an easy one. Down at the bottom it says days in receivables. All this means is that you've extended credit to your customers and they are paying you back around 39 days. Every 39 days you're collecting your receivables. This means cash in your bank account. The problem is you're probably trying to pay your bills every 30 days. So what do? This will give you the tool to analyze how well your business is doing. Do you need to go get a line of credit so you can cover those 9 days that you're going to be late with your customers? Or do you instill better collection policies? Or maybe you offer incentives that they pay earlier. As a banker, I would compare this with what your industry is doing. If your industry is collecting on average every 25 days, what are you doing wrong? That's what I would want to know as a lender before I make you any loan. And so this is a tool that you will use to manage your business. It talks about RMA, annual statement studies, and we've talked about this in previous sessions. It is risk management analysis. It is available at your public library, at the main library. Go to the resource counter and ask for it. It is not on the website. It's called annual statement studies, and it gives you the analysis of the ratios of various industries as determined and calculated by them. You can look at financial ratios, business stats, and benchmarks under BizStats. Other information that comes from associations. But this is information for you to compare how your business is doing with the industry that you're in. Next slide, please. I got to tell you that having owned a business, the last thing you want to do after working 10 or 12 hours a day, 7 days a week, is go to your desk and review the financials, to do the bookkeeping. But it is imperative that you do that in order to successfully manage the growth of your business. And it's imperative that you know the ratio analysis, especially if you're extending credit, and then so you can pay your own bills, and then know the comparative benchmarks of how you are comparing against your industry. Because if you're not matching up with your industry, you're doing something wrong, and you need to figure it out and figure it out quickly. Next statement. Next slide. Preparation is essential. Lenders wants facts and research, and we'll call you on it. We'll call you on it. If your cost of goods sold is different from the industry, we want to know why. If your collection of receivables is late, we want to know why. You should know why. It is your money. It is your business. You're the one that has the stake in the success or failure of this business. Next slide, please. Nobody does manual accounting anymore. Industry moves too fast. It needs to be computerized. You need to choose a system compatible with your accountant. Even if you're doing it yourself, you need to have an accountant available. Even if you're doing your own taxes, I strongly recommend you hire an accountant for consultation. If your business is successful and you're going to expand, you want to get with your accountant to see how it affects your bottom line. You want to talk to your accountant when you purchase major equipment. Do you amortize it or do you expense it? If you don't know what those phrases mean, you need to know. It's important. What kind of depreciation do you use? Do you accelerate it or not? I mean, this is information that affects your bottom line. It affects how you pay taxes. It also affects if you ever want to borrow money. What does your financial statements look like? Educating yourself in accounting and understanding financial statements. Again, this will come up constantly. You need to know. I know you think you're going to hire it out, mom and dad, wife, whatever. You as the manager, as the owner of your company, need to have an understanding of accounting, debits and credits, assets and liabilities, and work with your accountant, as I said previously. about what you're doing with your business, if you're going to expand, and what they think of the different strategies that you put in place for your business. Work with your accountant. Usually you can do this for free. They only charge you when you're doing work for you. Next slide, please. So this ends the financial matters. Next session next week is funding sources. And I strongly recommend that you attend that one. We'll talk not only about conventional financing, we'll talk about things like non-bank lenders. We'll talk about the difference between line of credit versus a term loan. We'll talk about crowdfunding. We'll talk about various things that are available to you to fund your business. And that'll be next week. Next slide, please. Simple steps for starting your business. The student webpage, score.org/startyourbusiness. Include links to handouts, workshop materials, additional resources. And we're going to have homework November 7th at 10 o'clock. And when you get a copy of this presentation, you'll be able to register on that link. Next slide. Other resources, I mentioned the Fresno Public Library, especially downtown, the main library. A plethora of information is available to you. Things to look for: one page BMC, Business Model Canvas. It is something that we recommend, strongly recommend before you do your business plan. It's a one-page business plan. It's like an outline, but it is a useful tool before you prepare your business plan. And we'll talk about business plans and how important they are. In fact, I think Jaspreet talked about, if you don't plan, you plan to fail. Financial projections, again, the SCORE website, SWOT analysis, strengths, weaknesses, opportunities, and threats. And it's something that you should know. I often say, if you want to know your weaknesses and whether you think you're capable of owning, managing a business, sit down with your parents, your siblings, and your very close friends. They'll tell you the truth, whether they think that you have the wherewithal to own a business and manage it. Target marketing, Google, grow your business online. All of these tools are available to you. Use them. Take the time and look at these things. It is your money. It is your career. You want to use these to prepare yourself as best as possible. Next slide, please. And I'll turn it over to Tom Sims. Thank you, Tom.
Thank you, Bob. SCORE can help you. We can help you further research your idea. We can help you complete your feasibility plan, your business plan, your business model canvas. We can help you finalize your financial forecast, develop your whole plan, prepare your loan package, launch your business, grow your business. All of these things, we're available to you to talk with you through, to be your friend, to be your coach or your mentor. Especially mentoring is what we do. And if you haven't signed up for a mentor yet, we hope you will. You can go with basic questions to our advice page that is listed here. You can email SCORE. You can visit our website, and especially our local website. And when you're in that space, either through our local website, centralvalley.score.org, or the National Find a Mentor website, you can request a mentor. You can request that mentor today, and that person will soon be assigned to you, and we'll get back to you as soon as possible. Sign up for our remaining workshops. All webinars and homework review sessions are starting at 10 o'clock. November 7th, Bob has already talked about Monday, the roundtable homework review. You'll have a chance to participate, to share your questions, and to share where you are in this process, and to get some very good help. Funding sources and next steps is, again, next week, we're going to send you the link to register for that. And then November 14th, the Roundtable Graduates breakout session and completion certificates. We want to bring you all together and spend some time with you. Well, let's launch our exit poll and see how we've all done together. Did you find today's information helpful? Would you attend a financial projections roundtable with an expert? Would you recommend SCORE to a friend? And did the facilitator and explain your question? And if we haven't, we're certainly going to take about, a number of questions in a few minutes. Okay, let's see how, take another few seconds to click those. Okay, the answers are yes, helpful, 100%. 100% would of you would attend the financial projections roundtable. 100% of you would recommend SCORE to a friend, and 100% of you had questions answered today. So this is really good. We thank you so much for your participation, and we want to move into the Q&A portion of our time now. And we have our panel.
First question goes to the bankers in the room, to either Bob or Mike. Why is it important to have a cash flow statement when I come in and get a loan? Bob?
Well, since Bob's not talking, so I'll take that. The important thing to remember is what exactly is a cash flow statement. Everybody gets the idea of, do I make money? I have an income statement. I sold this, this cost me this, I ended up with this profit. However, there's changes on the balance sheet. Payables get paid, receivables get extended, you invest in inventory. All those things take cash, but they're not necessarily part of the income statement. Your banker wants to see that. They want to see how you're managing those assets and liabilities as well, because those at the end of the day are going to say, I'm paying attention to my cash flow to make sure I have enough cash to make my loan payments. So in a nutshell, that's why the cash flow statement's important.
That's kind of a snapshot for the lenders to know if you have enough money to make your payments, basically, right, Mike?
Exactly.
Yeah. Okay.
Peter, do I need a separate business bank account for my business?
That's actually a pretty good question. Mike, you guys issue, we call it an EIN number. And why is that important?
Well, first of all, having a separate business account, I mean, you have to separate your personal from your business. You don't want somebody to mistake what's happening in your personal life with what's going on in your business if they're looking at your financial statements. You get your EIN number, I believe, from the IRS. You've got to have that so that you're not using your social security number and giving it out all over the place, because suppliers are going to need that. If they buy a certain amount from you every year, they're going to need to be able to identify you by your EIN number. So it's a small thing to get, it's easy to get, but it's important to have.
And probably the other important reason to have a separate banking account, because as being the lending business for several years and reviewing loan applications out there and looking at the Schedule C for a sole proprietor or a C corporation out there, especially for the individual accounts out there, commingling funds is what happens is they will take IRS, when you do an audit, they will take what they think you earn from your business and you're paying your personal expenses out of, like, rent or house payments, food and groceries, and they'll add that back in there and you'll be taxed on it heavily. So just prevent yourself from doing that. I know we try to skirt the table over there and on paying taxes, and there are allowable deductions in the IRS code for small business out there. Take advantage of it. Take advantage of it. It's very helpful, and it'll keep you out of a lot of trouble.
So what knowledge should a financial accountant have? That's a big question, isn't it?
That is a good question. There's a lot of people prepare taxes, but they're not going to give you advice. Let me speak about that. Whether you have an attorney, an accountant, or a banker, or a SCORE mentor, or a lawyer. Those elements of your business, you're doing a job interview. So interview the resources that you're using, and can they provide the resources for you? It's not just paying a fee for a service, but do an interview. If you don't feel satisfied, most of your people in business will refer someone to you that they've used for several years. And those are pretty good referrals. Most of licensed CPAs have E&O insurance, they're properly insured and that sort of thing. Enrolled agents is another one that practices for the IRS, which is higher level than an accountant. But interview, you're hiring these people. It's like hiring a new employee. So you want to be sure that they can fit the needs to serve you. Anybody can put the numbers in there and file taxes, and you just go down to H&R Block and they can do that for you. But you need someone that's going to be a business advisor for you and give you the best advice.
Shira is asking, what's a typical cost range for a CPA that'll do taxes for business and personal?
It
Can I
depends
just
on.
comment on that before we get the rest of the answer? You need to remember that a CPA is like the top of the line. In your small business, do you really need that? That's a question you need to ask, because there's another level down called public accountants. They're not certified. They can't issue you, here's the important thing, they can't issue you an audited statement. When do you need an audited statement? When your sales get up to 25 million. So for small businesses getting started, you probably don't need a CPA. Doesn't mean you shouldn't talk to them, find out what they're about, what they can do for you, and what they'll cost you. It's impossible to say how much one is going to cost, because it all depends on the complexity of your situation and how good your bookkeeping is. A lot of CPAs offer bookkeeping as a side. If they've been preparing your books for you all this time, it's probably an easy jump over to get a final financial statement out of them as well, without too much of a marginal cost. But you're going to need to have that grunt work done by either a bookkeeper or the accounting firm's bookkeeper, or even your QuickBooks account, if you're familiar with that and comfortable with it. Most small businesses, QuickBooks is pretty much the standard that we see in the banking world. So anyway, and the rest of the answer is?
No, Mike covered that pretty good. The basic question is really the scope of work that you require. I used to have people bring in their bank statements and expenses for the last 3 years, and they bring it in the Save Mart bag, and your accountant has to sort through all that, and that's going to be very expensive to do. I won't even take those applications when they do that, because number one, they're going to be a problem when it comes time to pay back the loan, because they have no idea what their expenses are. Get organized. You've got a yellow tablet paper. One side says expenses and the other side says income. Pretty easy to figure out. When one does the other, you either cut back your expenses or add more income. So learn how to do a balance act before you even do that, and understand your business. I always tell people that, geez, I'm not an accountant. I look at these financial projections. It is so confusing. Well, most business owners love money. And I say, if you love money, you better understand where your money's going and how much can I keep. And that usually gets their attention and gets the minus and the plus side balanced out. So it depends on the scope of work you give for an accountant, but somebody with this basic Excel chart of accounts to start with. So you've got some set of a base to work from. The more business you develop, it will require more accounting or expertise and background. Nonprofits are going to require an audit, and if you're receiving any state or federal funds, but that's another animal over there. But most small businesses can get by with a public accountant or just a regular accountant. And like Mike says, if you exceed your business, and when you get in the 2.5 to 5 million, you're gonna have to hire a more professional individual out there for charge of accounts and reporting and that sort of thing. So again, scope of work, but you gotta know what you're providing the accountant for. So the easier you make it for them, the less expensive it is for you. You can make it expensive, or you can make it as least expensive for you.
One of
Maybe
the things we
also,
would always say is help me help you.
Yeah.
And I think that applies here. Help your accountant help you by being very well organized and presenting a package that he can easily go through and figure out what's going on.
but you could take some of the mystery out by calling several and asking about their fees and asking for a free consultation, 10-minute consultation to lay out what you need and have them give you an estimate. And most are happy to do that. We have
Probably a
another-
good time to do that is March and April, right, Tom?
You might want to pick another month if you want a happy face.
Mhm.
I think Jaspreet might have an answer to this one. I have an accountant. Which financial statements should I be familiar with?
To my understanding, I think as a business owner, we have to know the income statement, because that's where we list all our sales, all our expenses, and we can see, what we are profiting, either, we are in loss or we are making profit, and how we can adjust, So if we are, having lots of expenses, that's where we have to, cut down on our expenses so we can have more profit. So that's the first one. And the second one, balance sheet. Balance sheet is where we are listing all our assets, whether it's a liquid assets or it's a long-term assets, your building, lands, and all those, that we're going to be depreciating. So we just need to know, because we can choose the depreciation method, if we know, because CPAs, they don't have time. They don't have time to analyze how it's gonna give you less tax liability. So that's where we have to get in, understand what are some of the depreciations that I can utilize to reduce my taxes, because we use a lot. We buy new vehicles for our business, and that's one way to reduce your depreciation. But there are many other ways. There are a lot of loopholes. As a business owners. If we don't know, we are missing, because your tax person, he's not going to get you, he won't tell you everything. And plus, how many times do we go to a CPA? Maybe just once in a year, right? So is that enough time? Maybe 5 minutes. Is that enough to, know about our taxes? Are they, is it, accurate? So the balance sheet, and then the next one is the cash flow statement. The cash flow is where we have to know for how much we cash, the liquid money that we're going to need to, utilize our, our business expenses. What is coming in sales, how much the cash is coming in, how much it's going out from our business, and at the end of the month, how much we have left for the next month, right? So these.
You need to read them all, huh? You have to know how to read them all. Felicia's asking a really good question. Does QuickBooks prepare all these statements for you? Quick answer is yes, if you know how to make it do it.
Yeah.
Raise a hand. How many would like to do a basics introduction to QuickBooks webinar with us?
Good.
Okay. Everybody on the call here, we'll try and put that together for the next 30 days, 45 days, and we'll notify you on that.
You got to know how to read your reports and how to generate them. Otherwise, you're at the mercy of everybody else. So you may not have to know everything, but you have to be able to understand them.
Tom, the answer to that is if you don't like money, don't read them.
Exactly.
Don't
Or
read
if you like court, don't read them.
Yeah.
There you go. Good way of putting it.
Yeah.
Folks, any more questions? I think we've exhausted most of them. If I haven't assigned one to everybody, I mean, haven't answered your questions, let us know and get with your mentor. I
Well,
hope-
let's talk about the homework on Monday. It's gonna be a fun day, everybody. We have enough people on here. Hopefully everybody shows up. We are gonna have an elevator pitch contest. So if we have enough people in the room, we will do an elevator pitch contest and the winner is gonna receive a $15 gift card. Okay, but you have to be present. We're not taking emails and things like that. And let's have some fun and learn. So on Monday is a fun and learn day. So financial projections are probably the most boring portion of the workshop series, but it is the most important series that we're doing. The following week is going to called funding sources, and we'll have some bankers in the room. We're going to talk about that. And a segue after that, we are actually going to spend an hour and talk about access to capital. If you're a small business owner today, access to capital should not be an issue. And we're going to cover that in depth on those. So the roundtables are very effective, and these are for you that will come in there. You'll all be unmuted and you'll be able to do one-on-one questioning, and it'll be interactive. And more importantly, you'll get a lot of your questions answered in the room. So with that, Tom and Mike and Jespri and Bob had to run to another appointment. Thank you guys so much. And if we could stay after, and then thank you, everybody. Have a great afternoon, and we'll see you on Monday. Bring your elevator pitch.